All right, what's going on, everybody? If you're here watching this video, you've been watching from the sidelines for a while, or you just started hearing about key zone indicator and you're trying to find out more about what it is and how it works and how we're utilizing it. So, for those that don't know and have been watching or just kind of curious, the way we trade or the way that I have been showing people how to trade within the economy is using supply and demand. And the reason I do that is because it is universal. Macroeconomics, microeconomics, just freaking commerce throughout the world. Everything is supply and demand. You have a lot of demand, create the supply, people will buy it. You have a lot of supply, but no demand. You have to kind of figure out how you're going to get rid of these things and come up with discounts, right? So you have to figure out all that stuff inside of it. And this is the same principle with supply and demand. You can find where buyers and sellers are. It's pretty simple. That's really all you need to know when it comes to trading is identifying the zones where buyers and sellers are, the most of them. Because obviously there's buyers and sellers everywhere, but there's always key points of interest that have a majority of those buyers and sellers inside of it, right? And that's why we created Keyzone. Keyzone shows you the more optimal area that you're going to get the best supply and demand, best buyers and sellers. This is not an end all be all. This is not 100%. This is not something where, oh, well, it's got a green line here. Just wait for it to touch it and buy it every time. No, it all is based on, but you have to understand the trend. You have to understand the higher time frames, right? Because if the higher time frames are saying, because right now I'm on the 1 hour and you see all these demands right here, meaning we're looking for optimal buys. If this is a higher time frame is saying it's bearish, then technically this is all just a pullback, right? And these demands could be blown out. So you have to understand higher time frame bias. You have to understand just market structure in general and manipulation, how they're going to control your emotions, induce you into trades, right? So those are little things you need to figure out. But if you want to know how to do it, obviously join in Economy. So what are these zones? How do they operate? If you want to know exactly how they're drawn, obviously get inside of Economy, get into the advanced trading, get inside the group, ask questions, and you can start notify. You can start seeing, or you can just kind of figure it out as you go. We do have a trial for this, so for anybody that is watching and wants to get their hands on it just to test it out, reach out. We can get you guys the link, and you guys can have a little trial period. I'm not sure how long it is. It might be 2 weeks, 3 weeks. I'll get back with the coder on that, but it's not forever. It's something that will just turn off eventually. So obviously take advantage. So what we're looking here, you're probably wondering, okay, so you got the demands here, you got the supplies. The simple
Hey, what are you
concept,
doing right now? Yeah, he's already
hey
off
babe,
to work.
you're
Do
not
you live with
muted.
someone else? I live.
There you go. So the simple concept is this. If you want price, if you want to be looking for buys, you need to wait for price to go down, right? You don't want to be buying when price is high. Never buy high and sell low. Always buy low and sell high. And one of the key things that I talk about, one of the golden rules that I always tell people is never buy in supply, which are the red zones, and never sell in demand because you're essentially saying, hey, I think price is going to break through. I'm a breakout trader and I want to catch the momentum of it breaking all these demands of these supplies. You might get a break every now and then, or if you understand how breakouts work and you know the market direction and the bias, you might be able to catch that. But if we're going based off statistics and probability, that's not going to work out every time. And I can tell you personally, for the last 10 years, it doesn't always work out. And it always is short lived. And you will always ultimately lose money by constantly just trading breakouts, assuming they're going to do that. The market has a pattern. It has to push down, then it's got to pull back. It's got to push up, then it's got to pull back. It has its structure, right? And that's how they trap traders on a lower time frame and higher time frames, however they want to do it. But for this, you need to wait for price to be dropping down. So in this case, just off of the way I'm looking at the market right now, without doing a full analysis, I would say if you want to be looking for buys, your first zone you want to be looking for buys in is right here. Does that mean it's going to do that? No. It could hit this, reject a little bit, maybe consolidate, and then it could shoot down to the next zone. The point is that these zones show you that price is going to react in some way. Always. It always reacts to this. It's either going to hit it and respect it like this, and I'll redraw the lines. So you got a couple different scenarios. It's either going to hit it and give a solid rejection and it's going to continue up. The other option is it's going to hit it, consolidate, and break, right? I'll draw that a different color. Or it's going to blow right through, right? Those are the only things that could happen. Usually when you get the ones that blow right through, it's probably some news, or it's probably some higher time frame bias where the market's been trickling and maybe on the daily these are just two little doji candles or very insignificant candles that represent a pullback, and then you get an engulfing which just takes out all these demands on a lower time frame but just fulfills a natural market structure on those higher time frames. So it really all depends, but you're not going to get this one all that much. The market doesn't always push down. What you're normally going to get is either these two: a solid rejection that pushes higher and continues with the trend, or you're going to get a nice little consolidation in which it won't just reject and it will drop. And here's a little piece of information for you guys that has served me well. If you are looking at a specific zone for price to be rejecting for you to enter in on trade, if it is not instantly rejecting, or if it is not hitting your zone and then pushing within the next 30 to 45 minutes, it's not the right zone. It's accumulating contracts for them to push down further or to induce you to go up higher and then they go down further, right? So if you see consolidation, that means that zone is not being respected and they are accumulating contracts in that zone for them to continue in the opposite direction you want it to go. So just be careful when you see that and don't just assume, oh, they're accumulating and now we have this many entries and this many entries. If it's going to reject this price point, it's going to do it pretty fast. It's not just going to wait. Like, you're going to see something like this. So you have a zone that was created right here, and see how price came down and immediately hit it and it took off. It didn't wait for an entire day or two just riding this line. It hit it and it rejected. That's the type of movement you want to be seeing, not something where it hits and then comes down to here, boom, 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 boom. You know, it's just like it's causing an emotional roller coaster. That's not something you want to do. You want to have easy movements. And this is kind of like for those of you that understand the market maker method. One thing I remember with Steve Morrow is that he said if it hits these high of the day, if you're trading the high of the day and the low of the day, and it doesn't make a move within 30 to 90 minutes, get out of the trade because they're going to extend that stop hunt, right? They're going to extend that push of inducement and then they're going to make that move. And that's the stuff you don't want to be caught up in. And that kind of is what led me to the point of being able to say, hey, if you're seeing price consolidate, it's not going to reject, it's not going to go in the direction you think, it's going to keep going in the opposite direction. So you got to learn to capitalize. But ultimately, you want to just be waiting for price to hit these zones. That's one of the golden rules. Never trade unless price is hitting a zone. Just wait for it to hit it. Simplify it. Don't overcomplicate it. Don't try to guess that, oh, because prices are there's no demand up here or supply up here until it hits this point or this point, I could just hold it. Well, maybe overall on a higher time frame bias, you might be right, and price will go up there. I believe it's going to go up there, but depending on how much you have in your account, the leverage and your risk, is it going to drop down first before it goes up? Maybe it's going to drop down a little further, then go up. You don't know what it's going to do between here and there. And trust me, you don't want to be buying those breakouts. So it's best to wait for these prices to hit into these zones and then go in that direction, right? So one of the other things was that I found out on how it's coded. If you're noticing that there's way more demands than there are supplies, that's because price is trending in that direction, right? It's kind of based off of a Nerva in a sense, with a Nerva looking for breaker structure. This is essentially the same thing on a higher time frame, but it goes based off of the time frame that it's on. So instead of just saying, oh, well, it's in an uptrend right now. Well, it is in an uptrend, but you don't want to essentially be looking for sells yet until price is hitting into these supply points. So technically on this time frame, you're looking at price still continuing. But if I go down to the lower time frames, you're going to start noticing, let's see, 15-minute here, 3-minute, 1 minute. See, it's not even on this one. I think it's on gold. Let me go to gold real quick. I remember looking at one of the pairs. Let me show you. So if I go to the 5-minute, okay. So now we're starting to get some supplies being created, especially on this 5-minute. What this can concluded is that price is either going to continue to break it, or we're starting the point where price is most likely going to reject it, and we can start seeing pushes down further that break these structures, right? Because every time price breaks a demand, that's a good sign. That's a change of character, right? For anybody that understands breaks of structure and changes of character, a break of structure is a continuation in the with the trend. Change of character is a reversal. So if price drops down to here, breaks this structure, that's called a change of character. And this is when people start looking for double tops or heads and shoulders because you got to break the neckline, and then it's got to pull back, and then you take the trade down further, right? That's a simple Forex move. But that's what we're anticipating when we start seeing supplies being formed. So that is one thing that could lead up to, or we could be seeing price start something like a range. And I love ranges, so, honestly, because it's the simplest thing to trade. If I know price is ranging, which I have other indicators that help me understand if price is ranging, like EMAs, I understand that from years of experience. But if price starts ranging, I can start getting in at the top and selling it, or getting down here and buying it. But again, that's on you have to understand market direction for that. But it starts painting a picture that maybe we could start looking for buys and sells within the same day. For those of you that like doing that on a lower time frame, even on the 1 minute or the 3 minute. Some of them aren't going to paint, but ultimately, if you are seeing more demand than you are seeing supply, or vice versa, that's dictating the trend. So right now, we have 15-minute here. There's a lot more demand, so we're most likely bullish. So that's the only thing you really want to be looking for is bullish moves. You don't want to be trading against it until we get changes of character, until we start seeing demands being broken. Then you can conclude that price is going to start reversing. But I can tell you right now, for those of you that are reversal traders, don't be just buy or selling price when it's at this high, thinking you're going to catch that big reversal. Because I can tell you right now, from from experience, when you start assuming there's double tops or heads and shoulders, and you're like, you know what, I'm going to get in before the drop, it's an adrenaline rush. Because if you do catch that move before it really tanks, you got a big move. That's a solid return. But don't let that fool you, because how many times have you gotten in on a sell thinking it was going to reverse, only to watch it just go up higher and stop you out, right? So you want to wait for the confirmation of these demands being broken. Once they break, see this line right here? See how it's like not filled in? That shows you that there was a supply right here that broke, right? So if a supply broke, this would be essentially considered a break of structure or a change of character on those higher time frames as we continue to go forward. So now that it broke here, we have a higher high. What comes after a higher high? A higher low. That means we could expect price to pull back, and where to? Either to this zone right here and then continue higher. Maybe there's some lower time frame ones. Yeah. So look at this. So now we can see it maybe breaking this one, but this is a 5 minute and a 15-minute zone, right? If I go to here, you have a 15-minute green zone, you have a 5 minute green zone. So you have a confluence of the price area. So this is a zone where price is either going to reject it, or it's going to consolidate, build up contracts, push lower, and then go up higher, right? So now you can start predicting inducements. And if anybody understands inducements, you know what time they do it. Certain pairs do it during Asian session. Some pairs do it during London session, like right beforehand. They try to get people in the wrong direction to form the high of the day. And then you have it during New York. Each session has an inducement. And if you can start to understand the key zones and okay, where they are at, you can start predicting price action. You can start predicting the solid movements. So that's what we're in right now on at least this time frame, and on the 15-minute, we're in an uptrend. So you don't want to be looking for sells at the moment unless you go down to the lower time frames and you're like, you know what, I'm going to wait for a supply to form, then I'll start to sell it. But I'm on a 1 minute right now, and there ain't nothing there. 15-minute, there's a 5 minute, that's your only indicator, but that's very, very low. You have all these demands. So your best bet is to wait for price to drop and you look for your buys. So it paints the zones, paints the areas that are the best. But I'm going to go a little bit further on how we can actually figure out which ones are the best, right? That's one thing that I think a lot of people are going to start thinking is they're just going to see these zones, they're going to want to take the trade. But what actually further validates a zone? Well, if you, like I was saying before, can understand a break of structure, you already got half of the equation. You want to find the zones where price didn't just create a supply or demand, but it broke physical structure too. So like here, you have this zone. See how it pushed up and not just broke this supply, but it broke this high too. So now this would be a break of structure, and then this pulled back, and then you had a validation. This was new. This was a NFP. This was Friday. It went up, had that break. You could have entered down here or here, depending on how quickly you got in the market. If you do trade NFP, if not, you would have simply just waited for the price to come back down and retest, and you could have taken that trade. But the way you find the best zones is simply identifying whether or not price had a break of structure or a change of character. So the question is, did this one have a break of structure? Easy answer. No. I mean, on a small time frame, yes, like right there. If we go to like a 1 minute, but if I zoom out, you might be able to say, like, oh, market structure was here, we had highs here, here, it broke, like that's a higher high. But you don't want to do that in a 1 minute because the 1 minute's very, very, what's the word? Tricky. It's trying to fool you. That's where people trying to trade very quickly, get in and out of the market. But that's where most of the manipulation happens. Some of the candlestick patterns that you see online for free that they teach you about, they don't work on those time frames. You got to work on like the 1 hour, the 4 hour, the daily. Those are the ones they work on, the lower time frames. So because price didn't really have a solid break of structure here, in my mind, this doesn't really count. And on top of that, it's at a high, at least from here. I mean, you clearly have more zones up here indicating that price is gonna shoot up higher, but it wasn't like a solid, like this is definitely where buyers are. No, this is just where a micro version of them are, a small amount, meaning this is very likely to break. It's very likely to break because it doesn't have a lot of momentum. It has a zone, which if you want to trade it in a scalp, you can do that, but it's not like huge, like down here. That's a zone. Look how it came down and retested it. Here, that's a zone. Price came down, retested it, took off. So if price comes down to these zones right here for even a bigger retest, we could see some solid rejection, or we can start seeing some ranging happen. Either way, it's going to take a lot of momentum for price to break this entire zone, to break all these demands. So we're going to have to wait and see how that happens. If I go to the 1 hour, let's see if we can find something here. 30 minutes or the 4 hour. Let's see. These are all broken structures. So the higher time frames there now don't have the zones that we're looking for. So it's mainly just the 30 minute. I'm going to go back to EU. All right. So this one was already retested. This one was not retested, and it did have a nice break. But like, look at this one. These are the two I'm really trying to focus on. So you have price, this area broke up here, and it broke this high. So if price comes back down to this zone, and on top of that, I mean, look at these candles. See how much momentum that is? When you see candles like this, so here's another hint. It's probably common sense, and most people may not think of it like this, but when you see massive engulfing candles like that, where the bodies of the candle are huge and really just taking over all the rest of the candles, that's a lot of buyers. It's a lot of buyers. And guess what? This algorithm that this market's based on is not just hedging, but I mean, or just taking the buys, they're also taking the sells too, meaning they have a lot of sells down here. They're going against this because in order for people to be buying the market, there has to be people selling the market. So that means people are in drawdowns still, whether that be the institutions or the hedge funds, whatever it is. They could be in the sells. And if they have enough liquidity and money, I mean, they can move the market ultimately. So what I'm saying is this is in that as a big zone, and this is a big zone, meaning if price starts breaking these little tiny minuscule zones that didn't really create massive pushes, we can see price reject it, but break it, price reject it, and break it down to these where we're going to start seeing some sort of patterns form that create higher lows and maybe continue with that trend because these have more momentum. You don't, retail traders do not create pushes like this. I'm sorry. They don't. Volume does, and how much money is being pushed into the market by multiple institutions. That's who controls it. It takes hundreds of thousands of dollars, if not millions, to push the market just a couple pips. So if this is a $6 trillion a day market, just imagine how much money is put into these pushes. So if you find these types of pushes, and then you're looking at the market and it's like barely doing anything over here, but it's still creating zones, that should give you like some sign that maybe price is going to start. It's going to either can trickle up a little bit and it's just going to go up to these higher time frame zones, but you can damn well sure guarantee that price is going to come down and it's going to hit these zones because these are where the major zones were rejected. Right? They have the most amount of momentum. They have the most amount of buyers in this case. And if it was flipped around, then it'd be the most amount of sellers. But that's the zones you want to look for. So you wait for price to create a zone. Never trade price until it's inside of a zone. So you never trade a buy until price is in one of these zones. And you never take sells until price is in one of the supplies. Never trade sells and demands and buys and supplies. Another thing is you want to validate which one has the biggest momentum. Find the ones with the biggest pushes. Those are the ones you really want to pay attention to. And then third is look for breaks of structure. Look for the ones that really took out highs. So this push took out this high, this one and this one. So if I'm looking for a really good secured buy, I really want price to drop down to these two areas. So I would mark off, hey, this zone right here is most likely going to be an area of interest for me to look for buys. Right. So I drew that up and I'm only on the 1 hour. If I go to the 15-minute, look at that. I'm getting multiple indications that this is something that we could see. And it might not even be a simple push down. It might be price comes down here, starts chopping a little bit, continues down, and then pushes up harder, maybe taking out this high or whatever it's going to be. But I now know that this zone is very powerful and you can mark that off for yourself. So this is what this is the cool thing about the key zone. It takes the guesswork out of it and you just got to be disciplined in understanding the market structure. I recommend sticking to a couple pairs. I trade gold and Euro USD. Those are the ones that I am very familiar with in market structure and their movements. So it's very calming for me. And I know right now I'm not touching anything for a buy. I'm going to wait for price to come down. So this helps take the guesswork out. You identify where your best buyers and sellers are, and you can obviously use other confluences. I have the TDI. I use my EMAs. I understand the market structure from there. You can look for imbalances for those of you that are smart money traders or whatever ICT thing you guys are, like however you look at it. This is meant to be a confluence to what you already know. This isn't saying, hey, I need you guys to drop everything you know about trading and just do this. I mean, that would be ideal. It'd be cool. And it's obviously going to take some reprogramming of your mind to be able to do that. But if you already have a solid strategy, why not add like one little extra confluence that's going to help you identify it? Because if you're looking for sells or buys, maybe this zone like it's a confluence of maybe what you have drawn or something else. It just kind of helps with that guesswork. Now you don't have to do it. Before I was teaching people how to draw it manually, and I can tell you from right now, it's not easy to do it manually because you have to really go through each time frame. You have to uh make sure that there is actual zones that meet that criteria, right? And that takes time. I was doing 4 pairs for a chart analysis a couple months ago, and it would take me a full hour and plus to just do an analysis on 4 pairs. Now it just I don't even have to draw up my zones. There are a couple zones that aren't going to be drawn, which is that's okay. And if you understand how to do it, then obviously you can draw it yourself and be like, hey, that's a nice little area. Like right now, price is hitting a 1 hour supply. I didn't draw that zone because the code it is the way it is, but every code is not perfect. If there was a perfect code, the government would have it. They would let normal people just be like, "Yep, that's 100% accurate. Look for sales now." Like you have to kind of draw your own sometimes, which is okay. But either way, it is ideally doing exactly what you're wanting or what you're looking for. So it's gonna hit this 1 hour. So I could expect price to start consolidating. It's very often. I'm not gonna buy it when it's hitting a 1 hour spot. So it's simple. And if you guys are interested and you want to test this out for a trial, give it a run. See how it goes with your strategy. And if it makes sense, obviously at it. Get on the calls. We do live calls in the mornings. This last week we've been getting prepped for a move, so we haven't been on, and we've let people know inside the group, but we do calls Monday, Wednesday, Fridays in the mornings for New York session, and then we have Saturday calls. This is on a Sunday, but like I said, we're getting things ready for this move. So, and then we're gonna have questions. So anybody that has questions, obviously you have the community, ask me, ask people that are utilizing it, and seeing how they can help you out. And that's what we're here to do. We're here to help you guys get into the markets and start making money faster. We're trying to cut that learning curve so that you guys have something that is tangible, that works, and allows you to just, be free, man. I mean, this makes my analysis way easier now. Like really, the last week I had nothing but wins when I was using these zones and just waiting for a price to get back into it that met my criteria. It's ridiculous, man. So if you guys have questions, let me know and we can go from there. Uh be doing more update videos. So anything that we have that comes out, you guys will get notified. What we do have coming out that I can say if you've made it this far in the video is we have multi time frames coming out. So at this very moment, they are only showing based off of the time frame. So if I'm on the 1 hour, these are 1 hour zones. If I'm on the 15-minute, these are 15-minute zones. We're gonna have a integration of the new logic where you can have multi time frames. So you could be on the 5 minute and it will paint the 15, 30, 1 hour, 4 hour, whatever time frames you want, and that could be toggled on and off. So if you don't want to have your charts, bamboozled with lines and zones, what you can do is you can turn them off or you can turn them on real quick and do what I did down here and identify where a majority of them are that have, the higher time frames included, and you could just wait for price to get to those zones and then turn it off. Like, and then just box it off and be like, okay, based on what I saw on the indicator, this is the most ideal. So, however it works for you. But we're excited. This is just the start. We have new technology coming out. We have new algorithms coming out for Egnomi, and this thing's only going to get a lot bigger. So reach out, get involved, try the trial of it. We'll give you the link. I think it's going to be, I'll put it in the video too. And let's start making some money, guys. Peace out.